Eric Muathe with Muathe.com with US market analysis for the weekend of November 5th and November 6th, 2016. Let's take a look at markets. Here at the close of Friday's session, we see that the Dow, Nasdaq, and S&P 500 were slightly down. We see that VIX was slightly to the upside, and crude oil was down about 1%. Let's take a look at those charts. Let's begin by taking a look at the Nasdaq weekly, which had a huge drop, relatively speaking, about 2.7% down for the week. Keep in mind, this is because from a technical reason, the RSI moved below 50. As you move below or above 50, you tend to have a huge reaction on the weekly RSI. So no surprise, once the market drifted below 50 for the week, we expected a net big down week into the close, which is exactly what we got. Now let's take a look at the highs. So when the market was here, there was a breakout attempt about 2 weeks ago that failed. So this was a failed breakout attempt on a weekly time frame. That was one red flag about 2 weeks ago. Take a look also at the fact that there was also another breakout right here as the market tried to break out above this previous weekly closing high. Now we stayed above that for a couple of weeks, as you can see, but finally we did manage to roll over about 4 weeks ago, and of course we've been down since. So that's another failed weekly breakout. Not to mention, if you take a look at the long-term picture, based on this previous 2015 weekly closing high, markets had been above that for a couple of weeks, but you can see now we are trading below that previous breakout level. So we stayed above there here, we recaptured it again, stayed above it, and then it finally rolled over the last 2 weeks. So that's another failed breakout attempt. So we can see now that the market failed to hold breakout highs, that now we are rolling over, which is consistent with our expectations over the last couple of weeks. Also, there's another line that we can draw going back to the break here, and we had extended this line, and we suspected that as long as the market found resistance on the back test, so here and here, as long as the market was showing resistance, that this was going to be where the market stalls. That seems to have been accurate, just like it was accurate during these resistance levels here, during the highs here of late 2015. So the weekly chart for the Nasdaq was telegraphing a pullback. We already got that pullback, and in fact, if you take a look at the Nasdaq from a daily standpoint, you can see that at the highs the market recorded this all-time daily closing high, but the RSI made a lower high, so that was negative divergence. What's interesting is if you extend the same line, so by extending the same negative divergence line, so there was this improvement in highs. This negative divergence line also offered resistance here most recently, as the market made a high at the tail end of, I believe, last week. We've been down since, straight down, day after day after day. Now if you go back to the S&P 500 daily chart, the market had been trading in a range. As you can see, there was a price wedge here, something like this. So we had been in this constructive wedge. The expectation was that we did not know which way the market was going to break out or break down, below or above the wedge, but we had a feeling it was going to be below based on monthly charts. So right now we can see that what was support here and again here finally did not hold this past week, and of course the market is down since then. Also, there's a line of resistance based on this line here, and again this line here is the negative divergence line. We just extended it, and this negative divergence was ever since the market made this improvement in daily closing highs. This line has been a problem. Most recently we hit that here for the high somewhere here of about late to middle of last week, and the market's been down since then. So in terms of potential daily support, it looks like the market is running into a little bit of a problem here. And why is that? It's because this was the RSI movement here that began the rally off the lows of February. And of course, markets have been trading higher since then. So we know that as a fact that this was, on hindsight, a good entry level for the market. So what we do is we've been drawing a straight line from here, somewhere around there. Now the market has come back to test this green line with uniform action here for these lows. Uniform double bottom support here for the lows there. But now, for the first time since February, it looks like the market is entering a different phase, because as of right now, we are trading below the green line for the first time since then. So that's not a good sign of what the market wants to do here. Also, take a look at the RSI lows line. There's a line connecting RSI lows that should have offered the market support, but as of Friday, again, we are trading below the blue line, which is the RSI lows line. So as long as the market is trading below those two lines, we have to assume that this market continues to be under downside pressure. Keep in mind, we closed with the RSI trading below 30.9 on its daily RSI. As long as the market is below 30.9 on the daily, expect the market to continue being under some downside pressure. And the reason why I say that is because on the long-term monthly chart, as we have observed over the last, I don't know how many weeks, maybe over the last couple of months, there's a problem with this monthly chart, and it is the fact that we made an improvement to all-time highs in terms of the price action, but the RSI made a lower high, and the RSI failed to move above 61.8 on the monthly RSI. So this is the worst type of negative divergence. The interpretation here is that we are potentially, given this chart, going to have to go into a major bear market. Now let's test that. If we draw a line around here at 61.8, we can see that all the bear markets going back to 2000 have began after breaking below this line and breaking a trend line. So you can see here we broke a trend line in 2000, and once the market broke this trend line, you can see we went into a major bear market phase. Again, we see we broke a trend line here in late 2007. That break led to another bear market phase, and right now we can see that we broke a trend line recently here. Right there we had a, let's call it a shallow pullback, relatively speaking, but now we've come back to test that break and we are showing resistance. In other words, the break line, this trend line break, you take that break, draw a line from there. You can see right now the market is hitting that level over the last 2-3 months and pulling back. I think for now this monthly chart sets the stage for a major bear market down the road based on this chart, unless the market can figure out a way to move above this red line. And maybe if the market can actually eventually break out, it might change this picture. But the way the picture looks, it looks very, very bearish. Now let's take a look at what could be potential areas of support going into the new week. On the weekly chart for the S&P 500, there is a line connecting RSI lows that has yet to be broken. So you can see the market could easily decide to find support here, and that could be good enough to stop the recent slide. So watch this line. If the market bounces on this line, that's good support. There is also another way of looking at this, is to draw a line connecting the previous highs, something like this. So this line was instrumental in moving the market higher. Once we moved above this line here, the previous RSI top side, during this period here, of course, the market has gone on to record a nice move since then, since this, and we are still higher. So what we can do is extend this breakout line, and every time we bounce on the line, the market is a buy. So we bounced on the line here, and the market was a buy during this period. And now we have a chance if the market decides to turn positive in the new week. In other words, if it can bounce on the blue line and the green line, that would also suggest that it is finding backtest support, and that could be good enough to actually give the market a reason to bounce after this huge drop in the past week. So in the new week, we can take a look at the market and watch these two lines, because if the market can find support on these two lines, in other words, a positive move this next week, and this could be good enough to start helping the market build on some of its damage. So this is something I would watch. Encourage you guys to watch. If the market finds support here, that could be good enough for a reason to see that the market, or expect that the market does have some type of stability, if not good enough to begin another rally or bounce. Eric Mwather, Mwather.com. Subscribers, be on the lookout for part 2. Otherwise, you guys enjoy the rest of your weekend. Good luck, peace, and blessings. ESCS.